European stocks slipped in early Monday trading as regional currencies touched multi-year highs amid an ongoing US dollar slump and a move by Germany's Bundesbank to add China's yuan to its currency reserve basket. The Stoxx 600 benchmark, the broadest measure of regional share prices, was marked 0.13% lower by midday in Frankfurt, weighed down by bank and financial sector stocks and a surge in the euro, which traded past a three-year peak against the greenback at 1.2296. US equity futures were marked notably higher, however, after a strong start to the earnings season Friday and a 228-point gain for the Dow Jones Industrial Average, although markets will remain closed today owing to the observance of the Martin Luther King Jr. holiday. Britain's FTSE 100 was also marginally lower from its Friday close at the opening bell as the pound climbed to a post-Brexit vote high of 1.3777 on both the ongoing dollar weakness and speculation that Prime Minister Theresa May could be ultimately forced into either ceding further concessions in negotiations with the EU or even arranging a second Brexit referendum. A big push downward for the dollar may be linked to a decision by Germany's central bank, the Bundesbank, to add the yuan to its official currency reserves, ostensibly pushing out the dollar in its overall basket. Currency markets were the focus of trading in Asia, as well, as the dollar index slumped to a three-year low of 90.38 in overnight trading despite the insistence of the US Federal Reserve that it continues to plan for at least 3 rate hikes over the course of this year as economic growth improves and inflation accelerates. More of what's trending on the street, the dollar's weakness, as well as bets that China's economy will continue to expand strongly over the near term, helped lift commodity prices in overnight trading and boost the value of regional stocks, taking the MSCI Asia ex-Japan Index to an all-time intraday high of 594.63 before paring gains into the close of the session. Japan's Nikkei 225 was also higher, following along from Friday's record set of closing levels for U.S. stocks, ending the start of the week 0.26% to the upside at 23,714.88 points. Oil prices were the main beneficiary of the dollar's weakness, with Brent crude contracts piercing the $70 mark for the first time in more than 3 years even as Houston-based oil services group Baker Hughes reported a rise in U.S. drilling capacity at the end of last week. Brent contracts for March delivery were seen at $69.67 each in the early European session, around 21 cents lower than their Friday New York close, after paring the earlier Asia gains. WTI contracts for the same month were about 9 cents lower from Friday at $64.21 each.